Hamilton, and welcome to Get Technical. I wonder if any of that got cut off. We are not rolling the intro video anymore, guys. We're going straight into this. But I did have producer AB do some homework last night to work out a little intro song. Producer AB, I was hoping that you could sing that right now.
Get technical. Get technical. We're gonna get technical. I still got to work out some of the kinks, but that's the first and second verse, or the chorus. Maybe we haven't decided.
Yeah. But so far, let us know what you think. Definitely give us a like if you want us to keep workshopping that. I think we'll keep workshopping it tonight, Aaron.
Yeah, I have a couple producer friends out in LA and stuff. We'll get some beats sent over. We'll do some different things.
Can I hear that one more time though?
We're gonna get technical. We're gonna get technical with Neil
and
AB.
All right. Thank you. How's everyone doing today? Give us a 1 in chat if you're doing well. Guys. Did we call it yesterday? Did we call it? Let's take a look. QQQ, NASDAQ ETF. I think we called it. Guys, rounding top, double top, actually. I'm sorry. This is a double top. Hence our two curves here, these two arcs. First price target really is just our support back from the 7th of April. And so if you guys didn't tune in yesterday and you're just kind of wondering what the heck I'm talking about, we're looking at QQQ, which is the NASDAQ ETF, which contains all the top tech names. To name a few, Aaron, go.
Amazon, Apple, Microsoft, Facebook, Netflix.
Nice. That's good. So we've got a reversal because we had an upward trend and then we hit this level twice with these rounding formations, and we just couldn't get higher than that. And that's when folks are watching the charts started to think, hey, I think this uptrend might be turning into a downtrend. So the next question is, how far down will this go? I'm going to change this song because it makes me very uncomfortable. How far down does it go? We did this yesterday, but I'm going to do it again for you. We go to the peak of the mountain, right? Down to the base of the mountain here, as defined by where the middle of my M kind of shape is, these two candles. And then we add that to that line. And that gets us to the top of this white rectangle that I've drawn for you here. So that's my target for the low on this. We're pretty darn close today. The low today so far has been $326.21, which has pretty much gotten us here to my target of $325. Now, you might also notice on the screen that I've got this thing, if you can see that. That's our Fibonacci retracement. I'm going to redraw that. The reason I've drawn a Fibonacci retracement is I want to get a good idea of what are the important levels of support and resistance based on the previous price behavior of this ETF, which is QQQ, the NASDAQ ETF. And the way that I'm going to do that, since we're in a downward trend, is go to the previous low and then go to the previous high. Two anchors, that's all it is. Previous low, I like to do the start of my trend that I'm reversing, and then go to the absolute high of the trend, which in this case is an all-time high for QQQ, before it started to reverse. Now, if that's a little bit confusing for folks that are used to being in bullish markets all the time, here's a cool trick I figured out this morning. Alt-I on TradingView, and also in your chart, your TradingView chart, if you're using Benzinga Pro, will invert your price scale. So you can look at this upside down, and it looks like a double bottom, right? Which is what we love to see. That's an opportunity to go long on a stock or an ETF. But if I hit Control I again, we can see the reality of the situation, that this is not a reversal pattern bringing us back up. This is actually a reversal pattern bringing us down. So my target is right about where my mouse is. That's about 325 and some change. The question is, does it stop there? Does it stop there? If we hit this level and start to show signs of a reversal to the upside, which once again, it took us a price structure or a price pattern to get us reversed down. I would like to see a price structure or a price pattern that tells us we're going to go back up. That's the only time that I'm going to go long. I would also like to see another thing, very fundamental to technical analysis, is on our RSI. You guys should totally see the RSI here. Let me just go ahead and make this full screen. You can see that for QQQ, we got about up to 69, which for in QQQ terms, kind of mild lately, not super high in terms of being overbought. Nonetheless, I do want to see us get a little more oversold before I turn this reversal into an opportunity to make money and go long. The great thing about bearish regimes is that they don't last nearly as long as bullish regimes when you're talking about such a mainstay index. So I'm just going to delete all of my drawings here. So you can just see the price action. You just see price. This is what you're looking at with QQQ. So these are the companies that really pull around the market. Less volatile than SPY. Less volatile than SPY. But you can see that SPY is also going to the downside. So once again, I've used my Fibonacci retracement tool. So I'm just going to select that again. Do it over again. And I'm going to go to the lowest point where my upward trend started, or at least this previous run. And then go to my all-time high, or the highest point. And there you can see that this red line is lining up with some price levels. You can see the bodies of these candles are this red candle is lining up with that line. We got a little bit below this line today, but not too much. So these are the zones that we're watching here. Very, very quick to use the Fibonacci. So what this tells me is that we've got a key level of support right here. And this is just purely going by the Fibonacci, and a key level of support right here. And let me remove this so we can see those. All right, we're going to watch these levels. And if I do them parallel, we'll actually be able to see the price to make it a little bit easier. So that's about 412 and 406 that we're watching. Those are your levels to watch if you're looking on entering. I'm
curious. I know we've had a lot of different guests that use Fibonacci retracements. Is there like one guest that we've had on that?
Robert Roy. Yeah, Robert Roy. I hope I'm answering your question.
Me too.
Robert Roy. Robert Roy.
That's who comes to mind when I hear Fibonacci is Rob Roy.
Yeah, and then I think I'm pretty sure, wasn't Rob Roy like a famous like Scottish like rebel fighter? All right, let's do it. I'm pretty sure that's Liam Neeson played in a movie, Rob Roy. Well, boom, there it is.
I was going to say Liam Neeson would be the perfect person to play a Scottish fighter.
There he is.
That's him.
Somebody tried to poke him with a sword right in the collarbone. He said, no, man. I was in the Star Wars prequels.
Yeah.
Not today.
Not going to happen. Maybe we'll do it. Maybe we'll do a Get Technical analysis of the top 5 Liam Neeson movies.
I think we can work that out. Actually, do you remember when I used the term foppish yesterday?
Yeah. Yep.
This right here. This. Oh, good. Don't you hate marketing? Don't you hate pop-ups? This is a fop. This is where the term comes from, my friend.
Okay.
So this character actually, so this is Rob Roy, who does our options trading on YouTube. And he's big into the Fibonacci's, but he says it with an accent, right? The Scottish accent, the Fibonacci's. Scottish. And then this is Luke Jacoby, but he doesn't wear the wig anymore.
All right. Speaking of Luke Jacoby, have you seen this guy's name in the comments? And this is his like actual name.
Jake. Hold on, we're both clicking it at the same time. Man, is everyone getting tired of Wingstop for lunch?
I don't know. I mean, it's a big ordeal in the office.
Yeah, I don't know. I think you guys can be more creative than that. So what do we do, guys, when QQQ, which is our most of our growth stocks, and SPY, which is our general health of the stock market ETF, what do we do when they're looking a little red? Well, we look for sectors that have strength. So what I have here on the right, which I'll pull, it doesn't really help to pull it out, but I'll zoom in. Can you guys see that? Let's get a little zoomy zoom. So I've got these tickers here on the right. These are each ETFs, sector-based ETFs that carve out a piece of the market, like an industry or a group of industries, and let you invest in the top companies all at once that represent those industries. So we can see running the show is XME. Yeah, so that's okay. So one thing is my tendency for this show in general is to always try to find sector strength, so that the picks that I'm giving and the patterns that I'm pointing out have wind behind them, and have a higher likelihood of impressing you. So you like and subscribe. But another thing that you can do, that's a really good point coming from chat. From a fellow member of the Illuminati brothers, Miles Kaplan. I'll tell you more Illuminati stories another time, but he's pointed out QQQ. But look at how cool this is. So I've got QQQ right here. I'm super zoomed in, so let me zero this out a bit. There we are. This is the NASDAQ ETF. It has a double top, as I portrayed. It's getting reversed. It's going to go down, yada, yada. How do we make money on it going down? There's a couple ways. You can buy puts on it. You can short it. And, there's a myriad ways. But one thing I did when I was trying to draw my lines on it was I inverted the price scale. And when I did that, this looks like not bad. Yeah, it's been in a downward trend, but now we have a double bottom reversal, and that's exciting because that means you're getting the stock on sale. The good news is, which is impossible, we don't live in a world where you can turn the chart upside down. So let me flip this upside down or right side up. Investors are fantastic, or the financial services industry is absolutely fantastic at making up bullshit that you can invest in and make money. And one of the things that they've created is an inverse ETF for QQQ. That inverse ETF is SQQQ. So when QQQ goes up, SQQQ, S triple Q goes down, and vice versa. And you can see that, broadly speaking, it forms the same price patterns. So now, this is kind of looking like a rat snack. I gotta say. So something to really keep in mind, yeah, folks are talking about in chat, when you're looking at inverse ETFs, a lot of times you will find that they are double leveraged or triple leveraged. That means that the daily movement of their underlyings is magnified. And if that sounds too complex, or if that sounds like some jargon, don't even worry about it. Just don't mess with them. It's helpful for day trading, not really for investing. But if you are a day trader and you're bored today, which a bored day trader is a worrisome bank account, to be honest. That was like a weird phrase, but I think it made me sound smart. You can look to SQQ for some trading opportunities. So we do have a double bottom here. It's slightly different in its curvature and its voluptuousness. And it's how many other ways can I describe a double bottom? You know what I mean. So let's take a look at the inverse and let's see if it's already resolved. Because
let's just say it's looking enticing.
That made me uncomfortable, so I removed him. I don't know how people objectify these price patterns like this. So it's a Zoomers, Gen Z. When you're looking at a double bottom, once again, you're measuring from the absolute lowest point to where the butt crack, let's just call it what it is, it's the butt crack, is, and then adding that depth to your neckline. So what am I going to do? I'm going to draw a line across the top of the butt crack, and then I'm going to draw a line from the lowest point on my double bottom up to the line on my butt crack, and then add it to it. And then you can see we've pretty much hit the resolution target for SQQQ, S triple Q. So opportunity there, maybe. I think if you're day trading, you're probably looking at it on a much shorter time frame. And then when I look at this, actually on a shorter time frame, you know, this could be a little opportunity here. If I'm getting too advanced, let me know. I'm trying to keep this very simple. But what you have here is just a very basic, and I'm on the 1 hour chart looking at SQQQ, which is probably not advisable here at 250. So let's go ahead and go down to 10 minute. You can see we've got this descending flag here. So you could play this with the swing high measured to the swing low. And I'm not going to spend too much time on this because I know it's a little bit advanced. And then add that to a breakout point if we get it to set a price target. Who's to say if it will happen? We would have to get a pretty big surge in price action here, a pretty big surge in volume. But that's the swing high, swing low added to the breakout. You could get a lot more aggressive than that. But to be honest, if I go back to QQQ, I think this little reversal, is this inverted? Wait, what? Oh, no, it's because I'm on the 10 minute. I think this little reversal that we got, it's going to end soon. I really do think so. So what we're looking at here on Get Technical is the bottom, which I believe the bottom, we could get something awesome and really bottom out around 325, which I think we're just about there. And looking at that as an entry point to go long. So let's look at QQQ from the big picture perspective. And I've only got, this is a shorter show today, so I've only got about 9 minutes left. And then I'm going to look at X steel because XME is the top performing sector. Let me delete all my drawings. And let's just look at the channel that we've been trading in on QQQ. I'm going to use my parallel lines tool and go to the lowest point back in March and then line that up with the lowest point in March of this year. Whoa, hold on. Is that true? March 2020, exactly 1 year. And then I'm going to, it gives me the second line. I'm going to bring the second line actually a little higher than I did before and bring it up to the high on the 19th of February. So what I'm doing is drawing my sloping line of support along the lowest points. And you can see how that's actually consistent, where we hit this dip here and we hit the sloping line of support, went up, dipped again, and then pretty much touched the sloping line of support. I would hypothesize that we're going to touch it again here, or come close to it like we did here, and then start returning back upward. So to put things in context, yes, we've had 2 red candles in a row on the day chart, but we're well within the upward trend. The economy is still growing. American companies still rule for investors. So we're still in good shape. And for a bounce, what you want to look for is something like this, returning to the mean here, where you can see sort of the average, which is what this trend was on for a long time. So we'd like to return to that. Okay, guys. It is 2:53. Let's take a look at X. before I do that, XME, the reason that I was excited about XME is because it is the metals and mining ETF, Spider. So the same type of ETF as SPY, except for this one was just looking at a specific subsegment. And the reason I like this is that we have somewhat of a double bottom, which we talk about it all the time. All the time. Producer AB he has a song about them that he sings sometimes. And we're looking at this like we might just have the push to get to a new upward trend or a new bullish regime with XME. So we've got this previous resistance, which I'm drawing this line here, and we want to break out of that. So we'll see if that happens. I'm not doing anything until it does happen. At any rate, since the sector is strong, now we look for strong names in the sector, and one of them is X, United States Steel Corp, which I've done a lot of doodling on. I'm actually going to delete all my doodling and just point out an upward trend started here, or I'm sorry, a downward trend started here, went down, and then rounded its way back up. And this rounding formation started in November of 2018 and is starting to come full circle now. And so what do we call that when there's a rounding formation at the bottom of a downtrend? We call that a rounding bottom. So I'm going to be a little bit conservative with the way I'm drawing this, and I'm going to use the swing high, or in other words, the last time price impulsed up before it really started to tumble down. So I'm going to draw a point here with my arc tool, and I'm going to draw my second point here with my arc tool and say this is the general rounding bottom formation. Now with a rounding bottom, you want to draw your point of resistance, which is going to be right here. And you can see that we've been playing around with this point of resistance, not quite breaking out from it. And so a lot of folks that are watching X know that there's a very high likelihood that we will see a full resolution of this rounding bottom, which looks something like this. The depth added to the neckline, which would get us up to almost to the previous all-time high, right? So that's getting us to about $45.17 on X, which would be a massive move from where we are today. That would be a gain of 70%. So folks are watching this little ziggy zag action on the right and hoping to make some money in the meantime. We've covered this stock so many times on the show. What do we got here? This is a cup with handle. I'm not going to go into too much detail because I'm running out of time. Cup with handle. Broken out. Impulsed up. Back down. Some impulsive moves. And then look what's happening now. We broke out of this mini or very short-term downtrend, which would be a lot more illustrative if I move to my 4-hour and line this up with just my red candles here, and you can see when the breakout starts and look at where we are today. And keep in mind, where we are today, looks like we're getting stopped right at previous resistance. I know I'm blowing through this, guys. I'm sorry. But this is a relevant point because this looks like some resistance that we hit. It was a tiny little impulsive move before we hit this downward, as Aaron would call it, V for Vendetta. So all eyes on X right now. Can we break through this very crucial level of support? If we can, I expect absolute fireworks. But in the meantime, plenty to be traded. Couple ways to look at this. I know some folks in chat that trade X for sure are looking at this using the Fib. So that's your Fibonacci retracement tool to the top of the previous swing high, to the bottom of the previous swing low. And then you can target something like 27 bucks here because that's the next line up after we've crossed the previous line. But in order to get there, we're going to be crossing through some serious resistance. So very key level, watching X for that cross above where it's at right now. In fact, I'm going to hit the plus sign here and add a price alert so I get a little sound on my phone when it crosses. But at any rate, guys, thanks for putting up with us in our crazy schedule. You know, doing the best we can to be consistent with you guys. Lots of folks saying markets are choppy, blah, blah, blah. Yeah. Keep your eyes on QQQ. Watch for that bottom. do yourself a favor if you haven't done it already and try out your Fibonacci retracement tool. I guarantee you're going to love it. It's like the Men's Warehouse thing. You're going to like the way it looks. I guarantee it. Miss those commercials. Yeah, everyone, thanks for tuning in at the later time. As always, follow me on Twitter at Neil's Tweets. Let me know what socks are watching so we can get them on the show. And smash that like button, for God's sakes. Otherwise, producer AB will have to eat Wingstop until he turns into a chicken. It's possible. I've read the studies. I went on Google Scholar and I found actual research that said that is possible if you eat too many chicken wings. So hit that like button or he's going to turn into a chicken. Anyways, this has been another episode of Get Technical. With me, as always, has been producer AB, Aaron Bree. I'm Neil Hamilton. Happy trading, folks.